A big part of the reason the price of Bitcoin this cycle, we're in the 120s, right? We can't ignore is the ETF that we've been seeing, right? Left and right, IBIT. Do you feel like these are good or bad for Bitcoin adoption? Like, what's your take on Bitcoin ETFs and institutional involvement overall? Is this a necessary step forward, or is this a Trojan horse that threatens Bitcoin's fundamentals over the long run?
Well, there's mixed views on this, and it's a very complicated topic because when people are holding funds in ETF, it's obviously suboptimal to holding Bitcoin on your own wallet, which is actually far easier to do to use Bitcoin as a bearer asset than, say, gold. And, you know, I'm conflicted too. Like, I see the value in ETFs because it gives ordinary people access to Bitcoin and they don't need to go through the challenges of learning self-custody, even though we as Bitcoiners don't think it's a hard thing. But conceptually, for a normal person that has never touched a crypto asset, having complete responsibility is a scary thing, believe it or not. So ETFs eliminate that, but ETFs also act as a portal to TradFi money. And I've said this like numerous times over the past few years since ETFs were approved, but there is no more barrier to capital inflow to Bitcoin. You can look at jan3.com/charts. We have a number of charts on ETF flows, but inflows are predominant, as we know, and there is no barrier. So in past bull runs, you would see like Coinbase goes down or something, or exchanges are backlogged, like Kraken, Bitfinex, they can't KYC fast enough, and then the bull run tapers off. But that's not the case anymore. Like you have everyone has a brokerage account, or most people have a brokerage account in the Western world, and they can simply buy, and you eliminate that need to onboard at an exchange. So that's a huge thing. But moreover, having that portal to TradFi money means pension funds, institutional capital, those can all flow directly into Bitcoin unhindered. And that is a big thing. Like if you tell a pension fund, similar to we're talking about nation states, buy Bitcoin and hold it. The first question is, can we? Can we get the approvals? Can we get sign off? Can we change our charter? But then second is, how do we hold it? Like, is someone going to set up a Blockstream Jade and keep it there, or set up a multi-sig? There are a lot of complexities, just like with the country, on how to hold a bearer asset, and especially something like Bitcoin. So having the option to just buy IBIT or FBTC or what's Bitwise is, it just changes the whole game, and there is no more barrier to entry.
Yeah, I mean, we're seeing it every day. More and more of these things are coming up. IBIT's, I think, the fastest growing ETF in history. Like,
Yeah.
wild times. But in addition to the ETF inflows, we're also seeing all of these companies issue preferred shares or raise capital specifically to buy Bitcoin. Is that becoming the new playbook for corporate treasuries? And if so, does that worry you for companies not named Strategy? Because I'd love to get your thoughts on it, because it works for MicroStrategy. They've been doing it for 5, 6 years, but we got a lot of new players in the space. Is this sustainable for everybody?
I would say so. I mean, strategy has shown us that there is a glitch in the matrix, and you can get infinite money. Um, Basically, that's what it is. Zero interest loans are infinite money. So
Yeah.
as more companies find these kind of glitches, they'll tap into them. Metaplanet's another example. It's partially regulatory based because buying spot is punitive. So people will just buy strategy for exposure. Sorry, buy Metaplanet for exposure. So I think there are different glitches in different regions and jurisdictions that let companies tap into this money glitch. And that is good for Bitcoin because it accelerates hyper-Bitcoinization. It accelerates the global wealth that is flowing into Bitcoin.
And as we're in this period of time where we're seeing ETFs, we're seeing Bitcoin corporate treasuries, do you think that there's any real risk that Bitcoin could be absorbed or controlled by the hands of traditional finance? Or are maximalists still winning the fight for Bitcoin's future right now?
Well, that's an interesting topic, Hank. Like, I think it was like a year or 2 years ago. I forgot now, but I tweeted about Bitcoin being split, bifurcated into
Hmm.
approved Bitcoin, the Bitcoin that's in ETFs and in funds, versus free Bitcoin, which is the self-custodied, freely circulating Bitcoin outside of the control of institutions. And I think that possibility is still there. We'll see how it plays out
Hmm.
for sure. But I don't see Bitcoin possibly being captured because Bitcoin will always exist outside the system. Bitcoin within
Hmm.
the system, within the financial system, is an arbitrary construct. But the natural state of Bitcoin is free flowing outside of anyone's control. And I don't think that will change at any time. You might have a good portion of Bitcoin locked up in ETFs and whatnot, or in nation state treasuries, but you also have a good portion not in treasuries. So I don't see it as an existential risk. There could be this separation in the future, but then you'll just have two different prices for Bitcoin, just like Argentina has two different prices for the dollar blue, and then, the official dollar rate.
Right, right. Interesting, interesting take. I like that. But there are a lot of like pundits out there, right, that still say to this day that Bitcoin's volatility makes it unfit as a reserve asset to begin with. How do you respond to that right now? I mean, and do you think that argument still holds water, or with each passing day, especially during this cycle, are we seeing Bitcoin's volatility kind of get muted quite a bit? Because that's kind of how it's feeling right now.
I would say so. I mean, 80,000 coins dumped on the weekend spot.
Yeah.
It barely made a dent. And I think that is the most poignant example of reduced volatility. Like in past years, let's go back 4 or 5 years, that would have significantly dropped Bitcoin, at least temporarily. But now it's almost like Bitcoin's numb. There's nothing. It's like, yeah, drop 80K, drop 100K, maybe 500K. Nothing will happen. It'll just dip down a little bit, but the buy pressure is just massive and sustained. Like every corporation with a Bitcoin strategy is buying at that depressed price, and it just scoops it all
Hmm.
up.
Yeah, do you feel like the lack of volatility we saw during this recent like 80,000 coin price dump is a pretty clear signal of the that we are fully in the maturation process of Bitcoin as an asset? Because like you said back in the day, that would have been a 20% drop overnight. Now it went down to I think to like just around 115. We're already back up to 118 in a couple of days. So just to you, is that we're moving in the right direction? Is that how that kind of is feeling right now?
Well, it's not about the right or wrong direction. This is just an
Mm-hmm.
inevitability. As Bitcoin becomes the new world reserve asset, the price will go up.
Mm-hmm.
It'll go to 1 million, it'll go to 10, and then it'll reach dollar sat parity. And probably before
Mm.
that happens, we hit a terminus point where, you stop pricing things in dollars because it doesn't make sense anymore. And there's tons of historical examples of this, right? Like fast failure of fiat currencies is the norm. It's not the exception. Look at the German mark, right? That's fast fail. Every currency, every fiat currency fast fails. It doesn't fail over 50 to 100 years, except for maybe the dollar. It's failed over 100 years, but it's coming to a close. But as it increases in value, then of course you see less volatility because it takes more to make a dent. If you go back to, I think last year, right? The Saxony government in Germany, they dumped 50,000, and that made a bigger impact than the
Mm-hmm.
80,000. So you can already see in a very short time frame a far more muted effect of coins being dropped.